Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AZZ INC quarterly report. AZZ Inc. offers a diverse range of businesses and services, including hot dip galvanizing coil coating solutions, metal coating for corrosion protection, hot dip galvanizing, spin galvanizing, powder coating, anodizing and plating, aesthetic coatings, corrosion protective coatings, value-added services for steel and aluminum coil. These services cater to various industries such as construction, appliance, HVAC, container, transportation, and others. The significant increase in AZZ Inc.'s stock price over the past year can be attributed to several key developments and strategic shifts within the company. A major driver of this growth was the company's strategic transformation, which involved acquisitions and divestitures that led to improved financial results and a focused emphasis on metal coatings. Additionally, AZZ reported strong financial performance in its first quarter fiscal 2025 earnings, with notable increases in total sales, net income, and adjusted diluted EPS. The company's promising growth prospects, driven by the anticipated contribution of a new aluminum coil coating plant, also contributed to investor confidence. Analysts' upward revisions of earnings expectations further boosted market performance, while Fitch Ratings revised AZZ's outlook to positive, citing market leadership and debt reduction efforts. Furthermore, the company's decision to increase its quarterly dividend by 17.6% added to investor sentiment. These factors combined to drive a 38.18% increase in AZZ Inc.'s stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increase in sales from the utilities industry, which rose by $15.2 million, 25.3%, in the 6 months ended August 31, 2025 compared to 2024. Additionally, the metal coatings segment experienced a 3.6% increase in revenue over the same period. The sale of EPG business also contributed significantly to revenue growth, with an increase of $227.5 million. On the other hand, revenue decline is primarily attributed to the decrease in transportation industry sales by $1.6 million, 2.1%, and a decline in gross profit by $6.6 million. The impairment loss on Avail JV investment also resulted in a significant revenue decline of $45.9 million. Net income and profit margins. A shift in fortune. The financial performance of the company has undergone a significant transformation over the past year. In 2024, the company reported a net loss, but by 2025, it had turned into a net gain, with an increase of $75.021 million compared to the previous year. This remarkable turnaround is even more impressive when considering that net income increased by 247% in 2025. However, not all aspects of the financial performance have been positive. The gross margin has decreased from 25.3% to 24.3% for the 3 months ended August 31, 2025, and from 25.1% to 24.4% for the 6 months ended August 31, 2025. On a more encouraging note, the operating income margin remained relatively stable at around 16.6%. The reasons behind these changes are multifaceted. The AZZ metal coatings segment has seen an increase in sales and lower selling, general and administrative expenses, contributing to the overall improvement in net income. In contrast, the AZZ Precoat Metals segment has experienced a decrease in sales and cost of sales, which has had a negative impact on profit margins. The higher R&D tax credits related to the new facility have also played a role in boosting net income. Overall, these changes reflect a complex interplay of factors that have contributed to the company's improved financial performance. The company's financial performance indicates a strong ability to generate cash from its core operations, with net cash provided by operating activities totaling $373,169,000 for the 6 months ended August 31, 2025. It is clear that the company is generating positive operating cash flow. This suggests that the business is financially stable and capable of meeting its obligations, positioning itself for future growth and success. The company's financial summary reveals a notable decrease in both its debt level and interest expenses over the past few months. Specifically, the gross debt has decreased by $290.4 million, while long-term debt has seen a 49.4% reduction. Furthermore, interest expenses have also declined significantly, with multiple instances of decreases ranging from $12,455 to $22,774. These reductions indicate a positive trend in the company's financial health, suggesting that it is effectively managing its debt and interest expenses. Management is optimistic about the company's future prospects and has outlined several key strategies to drive growth. The company plans to expand its geographical reach through new facilities, including a $121.8 million investment in an aluminum coil coating facility in Washington, Missouri. Additionally, it aims to strengthen its presence in the Midwest region of the United States by expanding its network of facilities. Furthermore, the acquisition of Canton Galvanizing is expected to enhance business capabilities and potentially generate goodwill that can be deducted for income tax purposes. Overall, management's strategy focuses on increasing capacity, expanding capabilities, and improving operational efficiency to drive long-term growth. AZZ's acquisitions and divestitures overview. AZZ has made significant investments in various businesses through acquisitions and divestitures. Notably, the company invested in the Avail joint venture, with two notable transactions totaling $159,598. On the divestiture side, AZZ sold its electrical products group to nVent Electric plc for a substantial gain of $275.2 million. Additionally, the company sold its majority interest in the AIS business to Fernweh Group on September 30, 2022. Furthermore, Avail sold the electrical products group to nVent Electric plc for $975 million in May 2025. These transactions demonstrate AZZ's strategic approach to expanding and optimizing its portfolio through targeted acquisitions and divestitures. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has paid out dividends to its shareholders, with detailed information available on page 43 of the report. Secondly, the company has also undertaken share buybacks, with further specifics outlined on page 52. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights potential issues with inventory management and supply chain efficiency. Notable indicators include a $3.8 million increase in inventory from August 31 to February 28, as well as a significant decrease in inventories, $17.1 million, accompanied by increases in accounts payable and income taxes payable on page 43. These metrics suggest that the company may be experiencing difficulties with managing its supply chain, potentially leading to inventory buildup and disruptions. That concludes the financial summary for AZZ INC. Feel free to comment below, and I will be happy to answer them when possible.